Good day, traders. Mike once again for Lazy Trader Mike's YouTube channel. Today we are going to discuss about zones. Now, this is market structure, or better known as support and resistance. Now, why are they important? It is imperative that you are able to analyze or do market structure analysis on your charts, because these zones are where the traders are. These are where the banks, governments, or high frequency traders do the trading. They're not gonna be trading on random areas in the chart. They're gonna be trading on a chart or on a price point that has shown significant support and resistance role before. Alright, so let's get started. You can see a sample chart here. There are four charts that we are going to be checking out today. Euro GBP, Euro US dollar, GBP USD, and USD Swiss, or dollar Swiss. Alright, the concept is actually simple. You just need to look for a price point that has been tested twice. If it is tested twice, or there's like a double tap on that price, it is a confirmed zone, and the price should leave that zone. Let's say in the first instance that it touches that zone. For it to be a valid support and resistance area, it needs to, or price needs to leave that zone roughly for maybe 100 pips or more. Alright, so let's see how it's done. The most simple way to get started with this is you switch to a line chart. Now I'm doing this on the daily chart because my main strategy is determine the zones or the major zone on the daily chart, or if somehow there's not much reference, I would go to the weekly chart or the monthly chart. But if there is reference that I can work with on the daily chart, that would be enough. And then you would notice that I've added M15 here. During my past videos, I said that I don't trade hourly chart or any time frame below 1 hour chart, but I'm actually studying a price action technique that is based on the M15, but it's still following the zones on the daily chart. I'll be showing the results to you on a later video, but for now let's focus on zone. Now, no matter if you're gonna be trading M15, M5, or 30-minute chart, 4-hour chart, it is important for you to know the zones, or for you to be aware of the support and resistance zones on the daily chart. Alright, so once again, double tap, and you don't need to go as far as 1 year. You can just use the data available within the last 6 months. Alright, so let's get started with that. So for this Euro US dollar, this is a daily chart, so look for the price point that has been tested twice. So this is gonna be that price point. So it's 1, 2, 3, 4, 5. Actually, this has been tested many times, and there was let's try to make this thick. There was one instance or two instances that price tried to go above this resistance line, but it failed. It just went back under the resistance line. Thus, resistance line is still valid. You're gonna be looking at that as a candlestick chart. You're gonna notice that these lines, or the line here, each and every touches, there will be an engulfing bar, or a big red or big bearish bar. Alright, so let's look for any other line. So you can just actually zoom out a bit. Alright, since this is the highest point that this market has gone so far, you can just mark that. You don't need a double tap in there. However, if you're gonna be switching to the candlestick chart, you're gonna use this candle here. it actually got close or even touches this particular line. All right. Once again, this is not exact price. This is a zone. It will have buffer, roughly maybe 20 pips on either side. So, but the more that you do this, the more that you practice this, you're gonna notice that these are significant, and these are the zones that you need to be watching for, whether you're trading the daily chart or the intraday chart. All right. So let's check for any other zone. I see this latest lower low here, and then price is actually right on this lower low here, but looking at it historically to the left, it has two touches here, and then once again came back here, and then price rejected the support zone, went back to the resistance. So this is going to be a valid area for support. And notice this point here as well. They're gonna be valid, and the last one is this. So you got 1, 2, 3. Once again, these are not exact zones. They are zones, meaning they have multiple prices bundled in them. Or you can just try to do this for you to be aware. Let's say price is trading right now at this price level. There is a candle that broke out. We don't know exactly if this candle would be a major move all the way to the next resistance line, but the support zone has been broken, so you need to be aware. So the most recent action will be supported by this line here and this line right here. So you can just highlight that for you to be aware that that zone is in play right now. Or you can just still highlight this one, because these are the zones that might be coming into play in the next few days or next few weeks. Alright, but once again, I trade intraday charts beginning from H4, and I'm beginning to study a technique on the M15, which I'm going to be showing you on a later video. But for now, let's study the zone. Once again, this is Euro US dollar, and that's going to be how your chart would look like with market structure. See how this is really relevant, because once again, these are, let's say, this price point, this was the multiple going to be looking left. So there is bearish engulfing here, and pin bar. Price tried to rally above this resistance zone, but it failed and then went back to support zones, and tried to rally again. Took out this support zone, this resistance zone, or this resistance played support for this, but it broke out. And then this one, it's important for you to just practice when the role changes. The role change from support and the role change to resistance, or vice versa. That's gonna, let's see here. This is a resistance area, but it's yet to be retested by the market. It was tested before, but this was back in August 2015. So this is gonna be a significant area in the future. So you need to watch out for that, and this area here as well, because the psychology behind zones is that, let's say you're a trader, and then you open your chart, and then you look at the chart. Let's say this price point here, you look at the chart, and then you miss this move. What you're gonna be doing, or what other traders are gonna be doing, or majority of traders would be, they're gonna be waiting here, and they're gonna be selling. When price gets here, I'm gonna sell. I'm gonna set an alarm, and I'm just gonna leave the chart. I'm gonna sell when price gets here. That's why you would notice that you get multiple taps or gyration from support to resistance, and from resistance to support, because these are traders trying to make up for a missed trade. So See, you're gonna notice that whenever you are doing this, okay, whenever it's just gonna be common, it's gonna be a simple practice. So there's always a psychology behind the move, so you don't ever forget that. Okay. So once again, this zone here is yet to be tested, and this was actually the Brexit. This was actually the Brexit. So this is the Brexit candle. That's like a huge roughly 525 pips, but that's nothing compared to the GBP USD Brexit candle, which was roughly 1,000 pips, more so maybe 1,000 plus pips or more. So this is gonna be playing its role in the next maybe coming weeks, or this is gonna be retesting, or the price is gonna be retesting the zone. It's gonna be just the basic of that. Once again, one tap or two taps to confirm support and resistance, and price should leave. There should be a significant distance between the 2 points. This one is roughly 285, so you can work more if you're gonna be switching on the 1 hour chart. You will have more room to plan the trade, because you're not gonna be near any support and resistance area. It's not switching. I don't know exactly what's going on with the computer, but once again, two taps to confirm a support and resistance zone. Okay, so this is the 1 hour chart. Seems to be unresponsive for now. Give me just a moment. I may need to shut this down. Sorry about that. The LOL client was actually updating itself, so it affected the CPU for some reason. Now, going back, this is the once again we have created the structure or support and resistance zone on the daily chart. When you do intraday trading, let's say you drop to 1 hour chart, you will have enough room to move or to trade your trading plan. So this is gonna be higher low, higher high, and you're gonna be seeing this. There's a pullback here. You can just trade that. You can trade all sorts of strategy using the intraday, but it is important for you to determine the zone on the daily chart, because once you encounter a zone on the daily chart, it's a significant zone. It can actually do this, because this is the zone where buyers and sellers are undecided. Buyers and sellers are taking profit, or buyers and sellers are placing new position, or stop loss being taken out. So that's gonna be most of the time it's gonna do this. It's just gonna be ranging. So you don't want to be trading on a range. You want to be trading on areas where it is free from those ranges. You want to be trading this type of move in the market from the resistance to support, from support to resistance. All right, so let's try to check out another chart. This is the GBP USD. All right, now if you would notice that there is like a huge chunk here, that is okay. You just don't mind that. It is important for you to find the price where the price point that was tested twice or even thrice. All right, so that's gonna be one of them, and let's try to look at this as well. That's gonna be good, and you can even mark this line right here and mark the recent spike. Once again, this is a line chart, so you can just try to adjust when you see them align perfectly, because once again, line chart gives you a clearer view of what's going on with the candles, because If you're gonna be just doing this on the candlestick chart, that's gonna be a bit confusing. But if you're gonna be doing that on the line chart, it gives you more clarity to work with your support and resistance analysis. All right, so if you're gonna be seeing this move here, you don't have to worry about those. You just need to ask yourself, if you were the trader, where would you buy and where would you sell if this is the move right here, if that is the type of market. So you're just gonna be concerned with the top. Don't get too confused with this areas. You just need to be concerned at the upper portion where price tested twice or thrice or tap the zone twice or thrice. You can actually maybe try to do this, but I'm not gonna recommend that because price once again was choppy in here, and chances are it's gonna be choppy whenever you would enter between these zones. It's better that you wait for a bearish or bullish evidence on the zone rather than trading in between the zone. That's just gonna be one of the exception. You're gonna be learning this as long as you're gonna be doing this on a daily basis or practicing on your support and resistance technique. Okay. Now, if you're gonna be zooming out and then there's not much any other reference on the left to the left, you can just check the weekly chart, or you can check the monthly chart. So once again, if you're checking the monthly chart and you see that this price point here is actually the lowest for the month, you can just mark that. You can go back to your daily chart. Here you go. You already have support and resistance or market structure on the GBP USD. But I'm not gonna be recommending you trade this for now because of this big Brexit candle. So try to measure this. This is actually roughly 1,790 pips. That's a huge move there, wiping out the sellers and the buyers. So you're not gonna be able to trade that. However, you don't need to wait for this to get wiped out. You all can just maybe look for a bullish trade whenever it pull back here for bullish price action to the resistance, or bearish evidence here to trade down to support. That's gonna be the GBP USD daily, and let's try Euro GBP. Euro GBP once again, switch to line chart, look for 2 price points. There you go. Once again, it doesn't need to be exact. It's a zone. It's not an exact price, okay? It's a zone. When you keep on doing this, you're gonna be practicing, or you're gonna be able to master this technique or style of doing market structure, or you can just do it without ever changing or shifting to the line chart. Okay, and let's see. Well, this area here, you can just try to bundle them, and then you can just place a big horizontal or box just to for you to be aware that this was this zone here played major resistance back then. Now it might play major support. All right, so this up here you can just mark that, and then there's the Brexit candle, as we call it. You can just mark that as well. But if you're gonna be looking at looking to the left, it actually made some significant this price point made some significant role as support, and it became resistance as well historically. So this is gonna be your market structure for Euro GBP. Once again, you can do this on any pair or any type of security, stocks, commodities, futures. It's gonna be the same. Now this is gonna be Euro Swiss or US dollar Swiss. Let's try to analyze this. Now, if you're going to be confused, let's say this one. This actually looks like a range. It's not making you higher highs and no lower lows. So what you need to do here is switch to the line chart and just try to get the upper area. See, 1, 2, 3, and then try to get the lower area. That's 1, 2, and then work from there. You would notice that this price point or this move come to here and then went back to support until it breaches. But once again, this move here pull back to this previous price point. That's gonna be that. See, and you can try to look for any other price point that was tested twice or thrice. That's gonna be that, and then you can just maybe try to put this thing. Make sure that back then you will be aware that this price point here became significant, played significant resistance role, and it may play significant resistance role as well today, as price moves towards that point, but it may not reach this blue line. Once again, this is a zone. This is not an exact price. Okay, you can also try to do that here. So once again, that's just the basic. Now when you trade this on the 1-hour chart or 4-hour chart, you would know that where to take profit, or where to or what zones or what price area you need to be careful. Let's say you're gonna be using an indicator that tells you to buy into this, but let's say your indicator indicates that you need to buy, but the buy point is already here. Your indicator already tells you to buy at this point. So that's not. It's best for you to be aware that okay, now I may not be able to buy here because price may reverse as soon as you enter. So you're just gonna be getting maybe some pip, or not being in a trade for a while. Now trading is actually really stressful for you to be able to do that on a daily basis, or it's best that when you enter a trade, you get to hold that trade for a long time, maybe several days, several weeks, and some would do that for a month or a year, because one trade in one pair, just being in profit, and then you're just moving your stop loss from one area to another. That's gonna be the best trade that you're gonna be able to get. Let's say you entered here, you move your stop loss here, move stop loss there. So you don't need to keep on worrying, keep on being in the market for like on a daily basis. But once again, I'm studying M15 because because of the effect of Brexit. Now, if these candles are already wiped out, let's say this has gone to this price point, has gone here, I may not need to trade the M15, but I like trading the M15 because I can see good moves here from resistance to support. It's not gonna be always the case. So I base my trading. Let's say if I'm gonna be trading intraday, I base the signal on the daily chart. Let's say let's try to find a signal here. Okay, this engulfing here. This engulfing candle right here. This is an engulfing candle, sort of like a shooting star formation there. All right, this is an engulfing candle. So the expectation would be this is gonna go down. This is gonna be reversing because these are sellers telling you, hey, we're gonna sell at this zone. Would you like to join us? So this is gonna be, you can actually trade this on the daily chart, but you would have to risk 1,000 or 102 pips. But you're gonna be getting here. This is gonna be your first target. It's gonna be 108 pips, and then your next target is overall you can get 249 pips or something on that trade. But if you have a small account, you can just try to monitor this on the intraday. Let's say you get this signal. Your expectation for the week ahead or the days ahead would be bearish. So you look for bearish evidence on that price move, following the price move or following that engulfing candle. Okay, so we're not gonna be discussing that, but I'm just giving you an overview. So this is the 4-hour chart. You are looking for bearish evidence, and then I'm gonna be teaching you how to enter this. Okay, on the 4-hour chart, maybe the 1-hour chart or the M15 chart, but I'm just still working on the M15 or the 15-minute chart. It's actually quite a short time frame, but it's not that short. You can still analyze the chart, make trading decisions, or take your time in making trading decisions. Okay, unlike, of course, if you're gonna be trading the 1-minute chart, you're not gonna be able to make good decisions on that. Okay, this is gonna be the area that you need to clear for you to be able to trade that engulfing on the daily. So as you see, it ranges because the following candle was actually bullish, but it broke out here. So you're gonna be looking for bearish evidence right beyond this point. You can just include the body, or that depends on you, but I don't actually include the wicks. So this one is a pin bar. You can safely enter there, and then when you enter there, your stop loss would be on the recent high. That's gonna be 87 pips, and you're gonna be getting mostly your first target would be 69 pips, which is roughly, or this one is actually 86 pips, and this one is 67 pips, and ultimately it got here until you get an opposing candle like this. So you ended up with 111 pips. So that's this is just an example on the 4-hour chart, but I'm not gonna be trading like that. Okay, I'm just giving you an overview of what to expect when you have zones on the daily chart and you're gonna be trading them on the intraday chart. All right. So if you feel ever that these zones are quietly, or are, I deleted that because that's the zone I drawn on the 4-hour chart, are too near one another, you can just try to focus doing that on the weekly chart, or you can also try focusing on the monthly chart and then just trade intraday. I know some traders who focus more on the weekly chart, and then they trade the weekly chart signal on the 4-hour chart or even the 1-hour chart. But once again, my trading is about daily chart time zones, or daily chart zones, looking for price action catalysts and trading that price action catalyst, or basing the intraday trades on that price action catalyst using different entry methods, which I'm going to be discussing next. Okay, so keep it here. Do subscribe to this channel if you haven't done so, and check out my broker, Traders Way. They accept Bitcoins deposits and withdrawals. It's actually cheap, they're fast, they're efficient. You should check them out. Link is on the description below. You have a great day. Thank you so much for watching. Goodbye.